Canada's mortgage rules have changed, and this isn't just another update. This is a complete game changer. And if you were in vacation mode at the end of 2024, you might have missed these updates. But don't worry, today I'm going to break it all down for you. Now, whether you're looking to buy your first home or investment property or upsize, or maybe you currently have a mortgage that's coming up for renewal, I think these changes could directly impact your financial decision. So with that said, let's dive in and have a look at these three major changes. Major change number one, 30-year amortization is now available for first-time buyers who are putting down less than 20%. You see, the 30-year mortgage option was only available for people who put down 20% or more in down payment. But as of December 15th of last year, 2024, you can now buy a home if you're a first-time buyer, and you can amortize it for 30 years even if you're putting down less than 20%. And what this does is it boosts your affordability and it lowers your monthly payment as a first-time buyer. If you want to do a quick math, this really reduces your monthly payments by about 10%. So I'm going to quickly show you some numbers here, okay? Let's just pretend that a $500,000 mortgage is what you're trying to get. At 4.5%, if you were to get a 4.5% mortgage rate on a $500,000 mortgage, if it amortized over 25 years, your monthly mortgage payment is going to be around $2,800 a month. Now, let's just assume the same interest rate, but you could amortize it over 30 years. Your monthly mortgage payment goes from $2,800 to $2,500. And I know this sounds good because your monthly mortgage payment is lower with this new option, and it does give you a little breathing room, but you got to keep in mind that over long term, over the term of 30 years versus 25, you will be paying way more in interest to the bank. Major mortgage change number two, increased insured mortgage cap. In Canada, if you're buying a home with less than 20%, you would get what's called an insured mortgage. And the cap for those mortgages is that $1 million being the purchase price. So meaning before, if you were buying a home for less than $1 million, you could get away with putting down less than 20%. But if you're buying a home for more than $1 million, you had to go with a 20% down payment or more. But as of December 15th of 2024, all of that has changed. Now you can purchase up to $1.5 million with less than 20%. So let's give you a hypothetical scenario here. Let's say you come to me and say, Dale, I want to buy a 4-bedroom house, 2-car garage here in Whitby. And I say, well, that house costs you $1.2 million. You see, before you had to have $240,000, 20% of $1.2 million to purchase this home. But now with these new mortgage changes, you only need $95,000, 5% of the first $500,000, 10% from $500,000 to $1.5 million. Now keep in mind, these changes aren't just for first-time buyers. Anybody that's upsizing, maybe for the second, third, fourth, fifth time, as long as the property is your primary residence and the purchase price is below $1.5 million, you can take advantage of this new rule. And this change in particular works really well for those who make high income, but they don't quite have the savings to purchase something big. Because as you know, you still have to get qualified for these big mortgages, but people with an income and they can debt service that, and that's great. And this change in particular is really gonna benefit those who are living in these expensive cities here in Canada, which Vancouver is one of them, and then another one is here in Toronto. By the way, I feel like I would be the worst realtor ever if I didn't say this. If you have any plans to buy, sell, or invest in real estate here in the GTA in 2025, I want you to book a discovery call with me through the link in my bio. I am a real estate agent here in the Durham region, and every year I help numerous clients here in the GTA buying, selling, and investing in real estate, and I really want to be your next realtor. With that said, let's get to the third change. And the third change is stress tests are no longer required for mortgage switching. If you're a homeowner and you have a mortgage and you want to switch your mortgage from one bank to another bank, you no longer have to get stress tested. Now, keep in mind, stress test is whatever the mortgage rate that you have or you're gonna get plus 2%. That's how lenders qualify you for a mortgage. So if you wanna switch your mortgage to another bank, you still have to qualify for it with pay stubs, tax returns, bank statements, etc. but you just don't have to get stress tested, meaning it's just easier to move your mortgage from one bank to another bank. Now, personally, this is my favorite change of all because this encourages competition amongst lenders. So if you have a mortgage coming up for renewal and your bank has sent you a letter or an email saying, hey, your mortgage is coming up for renewal, here's your interest rate, I highly recommend that you speak to a number of different mortgage brokers and different banks to see who can give you the best terms and rates. But remember, if you're looking to refinance and pull out the equity from your home, then you still have to get stress tested because that technically doesn't fall into the straight mortgage switch category. This is only for those who are transferring the exact same mortgage amount with that remaining amortization and nothing else. So there you go. These are the 3 changes. But what do these really mean for buyers? Well, number 1 is going to be affordability. Buyers can now afford homes that they probably couldn't afford before, and with lower monthly payments. But this also means that they're going to be paying a lot more in interest. So the total cost of ownership because of these interest rates are going to be more in the long run. But you got to keep in mind the Canadian banking system is still very conservative compared to what they have in the United States. So this doesn't mean that it's easy to get a mortgage, but it certainly is easier now than before to get certain type of mortgage products. If I was in your shoes right now, I would calculate the long-term implications, like figure out how much interest will actually cost you versus 30-year amortization versus 25 years. Look at your current spending habits, budget, really just sit down and look through your numbers. If you're looking to buy, you got to consider what a mortgage insurance is, HST that you pay on the mortgage insurance amount, especially here in Ontario, closing costs, moving costs, etc. And the mortgage cap now being 1.5 million, I highly be cautious of over leveraging. Just be careful. This is not a financial advice. You should definitely speak with a licensed mortgage professional or a reputable financial advisor and go through your numbers, but please be careful and do not over leverage yourself. And with that said, thank you for watching. And if you enjoyed this video, if you find it helpful, please give me a like and a subscribe. And if you really like it, I want you to share it with a friend. With that said, have a great day. Bye for now.